Ant Group just got regulatory approval to expand its business, and I'm going to explain to you guys in this video why, as Alibaba shareholders, this is very relevant. And so as you guys smash that like button, let me run that intro. What's up, guys, and welcome back to the channel. And so very interesting news today. I don't think it's like exceptional news. I wouldn't expect the share price to run up by around 12 or 15% or whatever it ran up by today, but let's dive into this, and then I'm going to explain why it's relevant as Alibaba investors by showing you notes, disclosures, and the financial statements and the model on how it all works through, so that you guys just get an understanding of why this stuff is relevant. And so as you can see today, this morning, it was reported that Ant Group's request to increase the amount of registered capital for the company's consumer unit to 18.5 billion won from 8 billion won was approved. And that's really good, because the more capital that this business is allowed to hold, the more it can sort of like expand its business through like lending operations. And so that's why this makes a lot of sense. A better capitalized bank, or a bank that has access to more capital, can just loan out more. And so if you're in the lending game, you know, they are in the lending business, they will now of course be able to lend out more. Now, I might have not gotten that completely correct, so you guys who know Ant Group better than I do, please let us know in the comments, and I'll make another video to sort of explain this better if somebody corrects me on something that I'm missing out on. And I just want to remind you guys that recall this article, and I covered this back in 2021, so we're going way back now, right? But recall from 2021 when Ant Group was restructured. And so what ended up happening was, you know, China actually approved Ant Group to operate a consumer finance company. So that was a very good move and very positive. And Ant Group would hold 50% of the stake in the new entity. And so before I get into the details, I just want to explain some of the math here. So if Alibaba owns a third of Ant Group, and Ant Group owns 50% of the consumer finance company, you can see that as a owner of Alibaba, you have exposure to Ant Group's consumer lending business. And that consumer lending business is an exceptionally fast growing business. So it's very relevant to the bottom line for Alibaba shareholders, but I'll explain that further in the next section. But just going into the details of that past transaction that we talked about in 2021, recall, guys, that Ant Group will hold a 50% stake in the new entity and contribute 4 billion won in registered capital. The other 4 billion won was going to be invested by a group of 6 people. So that's how you get to that 8 billion won. So remember, guys, at the beginning of the video that I said that they're able to expand their capital base from 8 billion to 18.5 billion. So this is a big move, considering that we thought that they were just going to have 8 billion won of capital as far as mid 2021. So this is exceptional. And what it really means is that if you're forecasting out revenue growth for Ant Group or Ant Group's lending arm, we are now able to forecast out higher revenue growth. Now, some of you guys will say, well, what does this matter? Because Ant Group is captured on the balance sheet anyway. So how does this actually impact Alibaba's P&L? Well, I'll explain that closer to the end of this video as well. And so just quickly going back into the news for today, I just want to make sure I cover this off. We did talk about the fact that it's being increased to 18.5 billion won from 8 billion won. And then you guys will remember, I just showed you how the 2021 press release on how Ant Group will have a 50% stake in the consumer finance company. But notice, some of you guys might be asking, what would this transaction do to that 50% stake? Well, notice that Ant Group will still hold a 50% stake in the consumer finance company. So now you went from having 50% of 8 billion to 50% of 18.5 billion. So very clearly, we just have access to more lending capital than we did previously. So this is an absolutely fantastic move. And I think it's very good for the overall success of Ant Group, and thus, you know, for the overall success of Alibaba shareholders. And so, you know, Winston Ma, the adjacent professor of law at New York University, says that this is a positive start of the steps that Ant Financial needs to go through with its restructuring process. And that's where I want to pause for a second, because guys, I just want to point out, don't get overly excited right now, because Ant Group is still going through restructurings. We have indications that things are easier now and they're over the worst humps of it, at least, but things could always go backwards. You know, investing in China sometimes is 2 steps forward, 1 step backwards. So just take that into account I wouldn't get too excited. I wouldn't say that we've hit the bottom and now we're sort of like on the upswing. We could very well be coming back down, and so just be sort of like business minded, be business like, diversify properly, all that jazz that I always talk about on this channel. And so just on that point, it remains unclear what the timeline is, if any, for the revival of IPO plans. And Ant Group has yet to receive a financial holding company license from the People Bank of China. And so, just to give you a little bit of more of an understanding of the consumer business that Ant Group owns, because recall Ant Group owns 50% of the consumer unit. And so, this business has the credit business, which is Huibai and Jaibai. And I know I'm pronouncing those wrong. I'm really sorry to you guys who actually know how to pronounce that. And so the Huibai is the spending unit. So, I think that's Alipay. You guys correct me if that's not Alipay. And then Jaibai is borrowing. And so, credit cards and just loans. And I think you can, they issue bonds as well in this. I think they do quite a bit here. And so that's kind of the lending arm. And of course, you can see why the borrowing segment would require capital. So you're kind of seeing why that is so important. And so, China's banking regulator said that the company had 6 months to complete the changes before the capital expansion approval becomes invalid. I think they meet that well ahead of time. Now let's go into some of your questions. Now, one of the questions that you guys asked is, why does this matter to Alibaba? Well, I'm going to show you in the model that the Patreons get access to. And so what you can do is you can actually search for Ant Group in the model. And there's two very important areas where it shows up. And I'm going to show you the first important area. So you can see here's the model that I have for Alibaba. And, these are the year's forecast sale. And you can see this is the adjusted EBITDA section. So, I look at adjusted EBITDA as a sort of like a proxy somewhat for free cash flow. It's not perfect, but the point that I wanted to show here is that notice that when you get under adjusted EBITDA, you're getting down into sort of like those adjustments needed to get to income from operations. But then once you even get below the income tax expenses, here's where I have, and you can put these in other areas, but I just have it here. Here's where you have your equity invested gains and losses. And so you can see Ant Group's, essentially what I'm showing here is gains of 25 billion RMB. And really what that's saying is that with anything that's accounted for on using like the equity method basis, what's really happening there is that yes, it's on your balance sheet at the price that you paid for it, but any increases and decreases to that amount will go through the P&L statement. And so, when you look at Alibaba's financial statements, every quarter you will see an increase or a decrease in income or losses from equity method accountees. And so then the offsetting transaction to that would impact the amount on the balance sheet, whether it goes up or down. Now, if those companies pay out dividends, that also actually reduces the amount on the balance sheet. And so just don't be confused there. I know that if a company has, fair value investments, it's shown on the balance sheet, but technically, and guys, this is just some accounting nerdiness, but technically what happens is the fair value changes actually go through what's called other comprehensive income, at least under IFRS rules. And so the changes in fair value also go through the P&L. They just don't hit net income. They hit after net income. So you just don't see it. So you don't realize that it's happening many of the times, but it is happening. So all changes on the balance sheet either get reflected, or all changes to investments on the balance sheet either get reflected through the P&L or through OCI generally. And that's for fair value investments, like I said, that go through OCI, and equity method accounted investments, which go through net income. Now, I don't just want to explain that, I do want to show it to you. And so you can see here, this is their share of results of equity method investees note that was in their recent press release when they issued their earnings. And so notice here, you can see that the share of profit and loss of equity method investees are all listed here. And so you can see that Ant Group actually provided them an income for the quarter in September. And so you can see how this flows through the financials. And so what you would want to look for is this total amount, this negative 4136. And then when you look at the income statement, so the statement of profit and loss, you'll notice I have it highlighted here, the share of results of equity method investees. You can see that 4136 shows up right here. So it actually contributes to the net loss or the net income for the company in that period. So you see how this equity method investees actually do impact the profit and loss statement. Now, they don't necessarily impact cash flows. And so when you look at my valuation, I'm using the free cash flow per share valuation. And so I'm not taking into account any cash flows from equity method investees. And so I've completely sort of like valued out Ant Group, and that's done more on like a conservative basis. But just as a reminder, or just like if you guys are unaware about equity method investees, the way that equity method investees impact cash flows is they'll issue dividends. And so you'll see that value come down on the balance sheet, but you'll see it show up on your cash flow statement as sort of like a dividend or like a payment for equity investor or like a income from investments. And so the only way equity method investees impact your cash flows is if they actually pay you out cash. And so, if you're going to use a free cash flow per share methodology and you do want to include contribution, because you're effectively saying that this will be a distribution in the future, but I want to include it in the current period, you can actually include contribution from equity method investees that shows up on the P&L if you want. I just don't do it. And so up to you guys how you want to value it. I know this is a little bit complicated, but once again, I have a call every month where I sort of like walk through this stuff. And so if you want to join us, you can join us at that upper tier of the Patreons and join us every month. We have a call this Saturday and we'll be working through some of this stuff. So just a reminder, if you want access to that Alibaba model and all the other models that I give access to, you can get access to all of that at the lower tier. And that's, it's the equivalent of buying me a couple of coffees every month just to get access to all my research. Now, if you want to join us for those epic live presentations where I actually give you sort of like a state of the market, I just talk about how I'm thinking about things, some risks that I'm seeing, etc. And then I answer all your questions. I'll walk you through models if you need me to. You can join us at that upper tier. And the other thing that I'm doing this month, and it's just effectively for this week, is if you join us at that lower tier and you do want to trial the upper tier, you can do that as well. Just let me know that you want to trial the call and I'll just give you a link. You can join us at that upper tier. And I recently put out a video on Apple where I showed that there is a risk with the price continuing to come down a little bit further. And I walk you guys through the model on why I think that risk or how I think it'll materialize. And so if you've missed that video, no problem. You can get access to that video right here.